As we look at the boards on this Monday morning, January 5th, 2026, the screens are showing SoFi Technologies trading live at $28.50. We are seeing a solid upward move of 3.8% in early intraday trading, a clear continuation of the momentum that began late last week. While many traders were watching the volatility in Tesla stock or checking their positions in Apple stock, SoFi has quietly been carving out a path that suggests the market is finally repricing the company from a struggling fintech to a dominant national bank. The opening price of $27.81 today set a bullish tone, and we've seen the stock climb steadily since the opening bell. This is a significant move when you consider that just a few weeks ago, the bears were howling about the $1.5 billion share offering that briefly knocked the price down. Most people looked at that offering as a sign of weakness or a desperate grab for capital, but the reality is looking more like a calculated move to shore up the balance sheet for the massive growth expected in the back half of this decade. If you have been following the conversation on various investing sites, you know the common narrative is that this company is still tied to the fluctuations of the student loan market. That is the expectation. The reality, however, is that SoFi has transitioned into a full-scale financial powerhouse that rivals traditional players like Fidelity or the automated systems found in Schwab Intelligent Portfolios. When we look at the data, the most surprising part of this morning's price action isn't just the percentage gain, it is the institutional conviction behind it. Recent filings show that groups like Kirchhoff Advisors have been aggressively adding to their positions, seeing the current valuation as a massive discount compared to the long-term potential of their tech platform. While the retail crowd on the Robinhood app might be focused on the day-to-day swings, the big capital is looking at the 50-day simple moving average of $28.02 and recognizing that we are currently pushing through a major resistance level. The tension between what the public believes and what the numbers actually show is where the real opportunity lies. People think of SoFi Active Investing as a simple tool for beginners, much like the Robinhood stock trading experience. But the underlying engine, powered by Galileo and Technisys, is becoming the backbone for other financial institutions. This isn't just about a pretty interface on the Fidelity mobile app or the simplicity of a Robinhood account. This is about a company that has effectively built a productivity loop, where every new member who joins for a high-yield savings account eventually ends up using SoFi Invest or their new credit products. This creates a low cost of acquisition that traditional banks simply cannot match. If you look at your own individual brokerage or how you manage your Fidelity wealth management accounts, you start to see why a digital-first approach is winning the younger demographic. What most people missed in the recent quarterly reports was the sheer scale of the member growth. We are looking at over 12 million members now. To put that in perspective, compare that to the active user bases on other investing sites, or the number of people using the Robinhood trading platform. SoFi is adding nearly 1 million members a quarter. This is why the institutional interest is spiking. They aren't just looking at the loan originations, they are looking at the tech platform and financial services segment, which now accounts for more than half of the total revenue. This shift in revenue mix is the reason why analysts at firms like Needham and Citigroup have been raising their price targets toward the $37 mark. They are seeing a fundamental change in the business model that hasn't been fully reflected in the stock price until this current rally. While you are managing your own self-investing strategy, perhaps through Interactive Brokers or a Fidelity brokerage account, it is worth asking how many fintechs have actually made the leap to becoming a profitable chartered bank. Most stay in the app phase forever, relying on partner banks and paying away their margins. SoFi chose the harder path, and we are seeing the fruits of that labor in the live price action today. The stock is currently trading well above its 200-day moving average of $25.25, which provides a very strong floor for this current move. Even if we see some short-term cooling, The trend is undeniably upward. This is a very different environment than what we saw in 2024 or early 2025. The macro pressures that once weighed down the entire sector are starting to lift, and the companies with real earnings, like SoFi, are the ones being rewarded. Comment below how many shares of SoFi you currently hold in your portfolio. Are you holding this for the long haul in a Fidelity IRA's account, or are you playing the short-term swings on the Robinhood app? I'm curious to see how many of you stayed through the dip in December. Let's look at the mechanics of the current price movement. The trading volume today is already surpassing the 3-month average, suggesting that this isn't just a retail pump. We are seeing large blocks of shares moving, which typically indicates institutional rebalancing. When the market sees a company like SoFi launch something like their new smart card with 5% grocery rewards or their own dollar-backed stablecoin, it signals a level of sophistication that goes far beyond what you find on most online investing platforms. They are building a closed-loop ecosystem. If you can get your paycheck deposited, pay your bills, invest in Fidelity ETFs or individual stocks, and even handle your crypto all in one place, why would you ever leave? This is the same logic that makes the Apple stock ecosystem so powerful. The competition is fierce, of course. You have SoFi Robo-Advisor going head-to-head with things like Schwab Intelligent Portfolios and the automated tools in a Fidelity account. You have the Robinhood cash management features trying to pull away the same younger users. But SoFi has a secret weapon in their banking charter. It allows them to use their own deposits to fund their loans, which keeps their cost of capital significantly lower than the competition. When interest rates are volatile, this is a massive advantage. While other firms are worried about interactive brokers' fees or finding investment help to navigate the rate environment, SoFi is simply leaning into their margin advantage. Looking at the broader market, we see that Nvidia stock is still driving much of the tech sentiment, but the capital is starting to rotate. Investors are looking for the next big growth story that has real valuation support. SoFi's price-to-earnings ratio is finally starting to look reasonable when you factor in the triple-digit earnings growth they've been posting. It's a rare combination of a high-growth tech company and a stable, profitable bank. If you are into online investing, you know that finding these inflection point companies is the goal. We are seeing that play out in real time today as the stock nears $29. A few years ago, the idea of SoFi becoming a top 10 financial institution seemed like a reach. People thought they would be crushed by the legacy players or outspent by the marketing budgets of companies like SoFi Invest or the massive reach of a Fidelity trading platform. Instead, they used their branding, like the massive visibility from SoFi Stadium, to build a household name on a fraction of the budget. This is about efficient growth. It's the same reason why so many people are switching their primary accounts from traditional banks to these more modern options. The ease of use you find in the Robinhood app is great, but the depth of service you get with a full SoFi account is what keeps people around for decades. If we look back at the older reports, you can see the steady climb in net income, from the first moment of profitability to the blowout Q3 of 2025 where they beat estimates by a wide margin. The trajectory has been clear. The management team, led by Anthony Noto, has a history of under-promising and over-delivering. This is a trait that the market values highly, especially in a sector that has been prone to hype and broken promises. When Noto says that 2026 and 2027 will be the big years for the company, the market is starting to believe him. That is why we aren't seeing the same sell the news reaction we used to see. Instead, we are seeing the buy the dip behavior. In the final analysis, the expectation was that SoFi would be a victim of the changing financial landscape. The reality is that they are the ones changing it. They have built a platform that combines the best of the old world, the security and profitability of a bank, with the best of the new world, the scale and speed of a tech company. Whether you are using SoFi ETFs for your long-term savings or taking advantage of Robinhood fractional shares for your smaller plays, the importance of SoFi in the modern ecosystem cannot be overstated. They are no longer just a fintech, they are a benchmark for what a modern bank should look like. As we wrap up this look at the intraday movement, keep an eye on that $30 level. If we can break through and hold that by the end of the week, it could trigger a massive short covering rally that takes us much higher. The gap between expectation and reality is closing, but there is still plenty of room for the market to fully appreciate the tech platform side of the business. For those of you managing your own self-investing strategy, perhaps through interactive brokers or a Fidelity brokerage account, it is worth asking how many fintechs have actually made the leap to becoming a profitable chartered bank. Most stay in the app phase forever, relying on partner banks and paying away their margins. SoFi chose the harder path, and we are seeing the fruits of that labor in the live price action today. The stock is currently trading well above its 200-day moving average of $25.25, which provides a very strong floor for this current move. Even if we see some short-term cooling, the trend is undeniably upward. This is a very different environment